By putting these together, it unlocks some different possibilities, and the biggest one would be scale.
There's potentially 80 million tonnes in a single open pit.
Welcome back to Rockstock Channel. It is Wednesday, December 17th, and we are back for the first time in 6 months with Chris Evans, CEO of Winsome Resources, who is joined today by Francis MacDonald, CEO of Li-FT Energy, with whom Winsome announced earlier this week a scheme of arrangement to merge the two companies, both of which have been advancing promising spodumene development projects in Canada. Today's conversation is an important one, not just for Winsome and Li-FT shareholders, but for anyone following high-quality lithium assets in Quebec, which are being consolidated, capitalized, and positioned for the next phase of development. Over the past few days, we've seen a lot of commentary around this transaction, some focused on near-term valuation, some on balance sheets. What we want to dig into today is the strategic logic behind this merger, why full consolidation of Adina and Gallonay matters, why capital certainty matters, and why leadership and governance matter at this stage in the cycle. We think Oz Bandit on X's post gets it about right. A Rio or Albemarle bid for Winsome at 60 to 70 cents would have ended the story early. This merger keeps full exposure to the next lithium squeeze, just as the structural deficit is becoming unavoidable. This deal is about evolution, not replacement. Winsome has built Adina into one of the most important hard rock lithium resources in North America. What this transaction does is place that asset inside a larger, better capitalized platform, with broader market access, deeper Quebec operating expertise, and the ability to think longer term about development, permitting, and optionality. For disclosure purposes, RK Equity has been a strategic advisor to and has held equity interests in Winsome since before its IPO in 2021. We are not, of course, financial advisors. This video is for informational purposes only, and nothing you hear should be considered investment advice. RK Equity has also worked as an advisor to cesium developer Power Metals, in which Winsome holds a 15% equity stake. Power Metals announced last week a significant $5 million financing and partnership agreement with Albemarle for its Case Lake project in Ontario. Rockstock Channel sponsor Lithium Royalty Corp holds a royalty interest on Case Lake, as well as Winsome projects in Quebec. And Lithium Royalty's parent company, Waratah, is also Winsome's largest shareholder and has committed to vote for the scheme of arrangement with Li-FT. Rockstock Channel's other sponsor, USCF Investments, is not involved at all in any of this, but it is a pioneer in commodity ETFs for nearly 20 years. Their 15 funds include single commodity exposure, broad diversification with SDCI, and themes like ZSB for battery metals and USG for gold with income. To find out more, watch our inaugural episode with their CEO, John Love, and visit uscfinvestments.com. We are happy to hear that Chris Evans will remain closely involved with the merged company as its flagship Adina moves into its next chapter. And we look forward to getting to know better Francis MacDonald, CEO of Li-FT, who we've met a number of times over the years and who will lead the combined company operationally. And a quick nod to Li-FT Chairman Anthony C., who couldn't join us today, but whose perspective as an OG in the development of spodumene assets both in Western Australia and Quebec from his days at Galaxy will prove invaluable. RK Equity has been a big supporter of Quebec assets over the last decade. The successful development of Elevra's North American lithium project and Rio Tinto's commitment to build a mine plus 40,000-ton hydroxide conversion plant at Bécancour demonstrates that the province is on its way to replicate the multi-mine and chemical conversion success that Western Australia has experienced over the past 10 years. My partner Matt suggested that the connectivity of Winsome and Li-FT for the Adina and Galilee projects is reminiscent of the combination at PLS and Altura at Pilgangoora. Recall, Chris Evans used to work at Altura. Over the coming months, we expect to continue to bring this leadership team back to Rockstock Channel to go deeper into project economics, Quebec permitting, capital allocation, and key milestones, as shareholders evaluate the scheme ahead of a vote expected later next spring. And with that context, I will ask Rodney to get into the details of this transaction, what really changes now that Adina and Gallini are coming together, and what shareholders should be focused on from here.
Thanks, Howard. This is a pivotal moment for both companies and for shareholders. What we want to do today is go beyond the press release and explain the strategic logic, the leadership transition, and why this combination positions Adina and Gallini as something fundamentally different than either asset on a standalone basis. So if we can start, Francis, with you, at the highest level, why was full consolidation, Winsome and Gallini, the right answer versus a JV or an asset level transaction?
Well, I think, stepping way back, my background is geology and I always start of what's in the ground. And so, I think putting Adina together with Gallini makes a lot of sense. And the reason is, I think, if you go to Li-FT's website, there's a transaction presentation. We put a cross section up and you look at the pit shell from Winsome's scoping study, and it goes up to the claim boundary. And so out of the 78 million tons of resource, there was 35 million tons in pit. But when you dissolve the claim boundary, we think we can at least double that and potentially more. So by putting these together, it unlocks some different possibilities. And the biggest one would be scale. And so if you can rethink this in terms of scale, like this could eventually get to the point of being similar scale to PMET. And, when you have, call it 75, 80, 100 million tons in pit, like that's getting to be world class. And there's not many deposits out there like that. So from a technical perspective, I think that is the biggest synergy, is you're putting these two assets together and unlocking a lot of value that's already there in the ground.
Great. And Chris, from a Winsome shareholder perspective, what was the single most important constraint this deal removes that you could not solve independently?
We knew we had a great asset at Adina. The problem we had was we had a number of structural constraints, in our business. First of all, we needed more capital to launch the next phase of our studies. Our permitting is paramount in our project development timeframe. We have the Renard options sitting in the background, which is still very important to us. But all of these require de-risking. And really that de-risking is via a bigger party, a strategic partner who's going to assist us with all of those things. And so when we started talking to Li-FT had Avenir as their strategic partner, and Avenir has a great deal of experience, both in permitting. They have the financial backing to assist us in all those, potentially in acquiring Renard or doing some form of transaction at Renard, and also in terms of doing all of our studies that are coming up. We saw that as very important. Li-FT is also based in Canada. Being an ASX-listed company has served us well so far, as in we've been able to raise a lot of money, but we really need to be TSX-listed. So Li-FT gives us that connectivity into Canada. And then the Gallini removing that boundary and bringing the additional tons that no doubt come, that mineralization we know is there, is extremely important. So I think there's no one thing, but it's the combined strategic benefits that a combination with Li-FT brings. It's compelling, and it's such a good deal. I think our board wholeheartedly supports it.
And just to step in there for a second, I think I'll make this comment, but it's out in the public domain. But if people haven't seen, Avenir is 100% owned subsidiary of Agnico Eagle, and this was the spin out that was announced, I think, in October. So when Chris is talking about having Avenir in the background, really Agnico is there in the background as well, and that obviously gives a bit of clout in Quebec. You know, Agnico was really started in Quebec. It was a single asset producer with the Renard mine, and it's grown into, you know, they're the third largest taxpayer in Canada. So, you know, having that kind of clout in the background is obviously is going to help. And any discussions with the Quebec government or Investissement Quebec as well.
And they're coming into the financing. Actually, maybe Rodney, you're going to ask about that, but that is a component. This merger is coming in connection with a financing for which Avenir is participating. So could you explain that?
Sure. So Avenir has been a shareholder of Li-FT for, it's probably about 18 months, and they currently have 9.9% of Li-FT. And so the idea is that they will stay pro rata in the pro forma company. And that's the background there.
And you're doing a financing of how much and at what price? Because it's coming at the merged deal price. If there's a flow through piece and then there's a non-flow through piece, I couldn't figure out all the math as I was looking through that press release quickly.
Yeah,
2 days
sure.
ago.
So yeah, it is a little complicated. So just to walk through that financing, so there's a $30 million sub receipt, and so subscription receipt, and so those subscription receipts convert to shares once the transaction closes. And so within that $30 million, there's a mix of hard dollars and charity flow through. And so the back end price of the charity flow through is $4.30 a share. And the front end price is $6.45 a share. So we'd be issuing those shares at $6.45. And then the hard dollar component is priced at the same as the back end of the charity. And then there's a sidecar financing as well. So that's a private placement of 10 million, and that goes into Li-FT directly. So the sub receipt converts when the transaction closes, but Li-FT is doing a financing as well, and that's to keep the Yellowknife project ticking along as the transaction closes. And so again, that's a mix of charity flow through and hard dollars, and it's both at the same price. So what comes out of it is in total it's a $40 million bought deal that's a mix of charity flow through and hard dollars.
It's very akin to what Sayona and Piedmont did. I think they did RCF came in with what's equivalent to our subscription receipt, which comes in at the end of the transaction, and then there was an immediate raise at the time. It's very akin to that.
So once you've done that raise, that funds the next steps with the drill campaign feasibility, that takes you out quite a long period in terms of progression.
I think that's one of the key parts of this transaction, which is maybe not obvious on first sort of examination of it, but the 40 million that's going to be in the bank when we complete this transaction, I think that's going to set us up for the next phase of studies and drilling, both at the Yellowknife project, Li-FT's project, and at Adina. And I think my view is that next year, when the lithium market is picking up, everyone is going to be looking for their next phase of studies, drilling, and therefore everyone's going to become raise, but not us. We've already set that up, and I think we're going to benefit from the next lithium raise because we've already done the deal, we've already got the money in the bank, and we're already doing those studies. To me, people talk about
now is the time to be putting money in the ground as quickly as possible if we are where we think we are in the cycle.
Exactly.
Chris, remind me, how much cash does Winsome have? So the combined entity will have how much cash at consummation?
Well, at our last quarterly, which is our last disclosable cash, we had about $13 million Australian. We've got normal business for the next 4 months, doing various trade-off studies and other studies in the ground to advance our project. What we've also got is about $25 million Canadian in equity in Power Metals. Now, we sold our offtake for 1.8 million Canadian this week. But we've also got that equity in there, which we will use as we need to. So I suppose it depends how you view that equity. I think we're well financed enough to see ourselves through normal activities the next 4 months. And then, Francis and I have been doing a fair bit of talking about this, but I think it's a transition period for the next 4 months.
Right. I'm assuming the transaction goes through, Li-FT has, how much cash will you have, or did you have before this financing? It seems to be I'll have like 50 or 60 million in cash plus 25 million in Power Metal shares, come April, right? To advance Adina Gallané, right? To, I guess, pre-feasibility or definitive feasibility study while you, renegotiate with the Renard option, with the support of Agnico Eagles, Avenir, just like all of that heft is when we talk about balance sheet and strategic, relationships, it really changes the dynamic for both Winsome and for Li-FT.
That's right. And from the Li-FT side, so we have also an equity position in a company called Power Metallic, so not to be confused with Power Metals, and and so that was
throw it in the mix.
Yeah, exactly. So that was about $6 million in stock, and then we were ending the year with about 4 million, and like we had been spending our cash down, which was a lot of flow through that went in the ground this year. So call it we're at 10. Chris is. It depends where you want to peg the value of the equity of Power Metals. You can look at the book value or whatever it is, but you're right. We come out with, pick your number, 60, 70, 75 million in cash and equities coming out of this transaction.
Okay. That Power Metallic, is that, it used to be called Power Nickel? And like,
yes, that's
okay.
Right.
Critical Elements also, another Quebec hard rock story, owns a stake in that as well. So,
Yep.
Maybe there's some monetization or consolidation, or I don't know what. I don't know that story well, but a bunch of people on X have been promoting it as a major discovery.
Okay, so if we look at this more broadly, you've got the Gallané and Adina forming, by dropping the boundary, it makes sense now for Agnico, which will be looking to back something of scale. So that logic makes complete sense. But I guess the question is, how would shareholders think about, the resource growth versus economic quality of strip ratio, pit depth, flexibility, and not just the tonnage? Is there much of a change in combining the two, Chris, or is it similar?
I think what it does is, there was a natural constraint with that boundary. The first 5 years is still a 1-to-1 strip ratio, regardless of how you cut it, which is, of course, a fantastic outcome.
For spodumene, sure, yeah.
For spodumene, yeah. It's amazing ratio to have. I think what it does is it makes us think about, well, if, as Francis said, there's potentially 80 million tonnes in a single open pit. Once you combine the known mineralization on the Gallané side plus our resource, 80 million tonnes in a pit. That's no one, I don't think, on the planet has got that. And so that's a real upside for us. So then we start to think, well, how does Renard play into that? Renard's 2 million tonnes per annum at the moment, that the existing plant there. Of course, the infrastructure is going to play an important part for us in some form, I think. But do we think about Renard differently now? With 80 million tonnes in a single pit, the economics has got to change, I think. We need to recut the PEA we did, probably. We're going to do some trade-off studies in the coming months, and I think that we're going to come up with a whole new set of economics that's going to look very promising. It's very hard for anyone to match that, I think. I don't know what you think, Francis.
No, I agree. Like Chris said, there's not many. There's very almost none that have 80 million tons in a single pit, right? So at that point, you're at the top of the tier one deposits at that point. So I think like what Chris and I have discussed is that we really need to kind of reimagine this at this point, and really do the trade-off studies and let the economics drive the decision making. And what does this scale to? Do you keep it at a 2 million ton per year throughput, or for 40-year mine life, or do you go to 4 million tons per year on a 20-year mine life? And how does Renard play into that? So those are the questions I think that we're going to address in the next months. And I think the main thing is that letting the economics drive the decision making is where we want to take this.
On that topic, if you expand it, I mean, Renard has its own capacity and invested, capital to double the size of it, would be, a significant undertaking, or would it complicate, discussions with Renard? Like, how do you navigate that thought process?
I think there's loads of ways to cut this. The infrastructure at Renard is important for the region. So there's the airport, there's the camp, there's the road that leads to it. All of those are important. They're going to be important to us in developing Adina going forward. The processing plant itself, I think, as Francis said, like, we're going to let the studies and the economics dictate our decisions, but who knows where it could end up? I mean, is it we do, that first 5 years where it's a 1-to-1 strip ratio, maybe it makes sense to drive the ore down the road and process it at Renard for the first 5 years while we build a new plant at 4 million tonnes per annum for the next 20 years up at Adina. I think there's loads of ways to cut this. We don't know yet, but I think what Renard gives us is optionality. It gives us the optionality for not only the infrastructure, but for processing if it makes sense. It's completely open to us. I think that's the beauty of it. We've got it sitting there, and we can use it as makes most sense.
And how? I mean, you walked away from the option. It doesn't seem to me that the government has many other takers for this asset, right? So you obviously, the strategic logic for you to develop it is great. But at the same time, there are some care and maintenance costs and other things associated with that. So, and the politics of critical minerals and Canada and everywhere in the world is kind of like changing under Carney and his new energy minister. So, I mean, you're recutting the thinking of the project, but it's also recutting, I think, the dialogue and negotiation with the government. Is that fair? And what I mean, it's the end of the year now, and they've only been in power for a couple of months. So I just attended a conference, and 2 conferences in DC recently, and there was a woman from Canada that very versed in this dynamic, and they said the October announcement of $6 billion for 25 projects was like kind of just the beginning, and to expect a lot more announcements at PDAC as Canada is actually holds the presidency of the G7 right now, and the G7, critical minerals is like dominant everywhere. So very interesting. Like, your deal will be becoming consummated around that time, but I would imagine you guys will be dialoguing from January, on these topics. Is that all fair? I'm just trying to connect some dots.
Again, I think when you've got the 3rd largest taxpayer in Canada, coming into the room and showing support of the company behind it, it's a little bit of a different situation, right? So, like Chris said, it's wide open at this point. The optionality is incredible, and then we just kind of see what makes sense and where we can get to.
And our conversation, compared from a Winsome perspective, next time we speak to the owners of Renard, it's going to be from a position of strength, not from just Winsome sitting on its own. We're now much better capitalized. We've got a strategic partner in the background. I think it's going to be a completely different conversation, and it leaves everything open, as Francis said.
Sure. So, Chris, in terms of thinking about your role transitioning from MD of Winsome to join the board of a larger platform, in your mind, kind of what stays the same and what intentionally changes?
Well, I think given that I've been working in Quebec and on Winsome for the last 4.5 years, I think that transition of knowledge and the continuation of the knowledge and the relationships that I've built and our team has built, I think that'll be important. And as one of the largest shareholders of Winsome, I want to see success. You know, I've got a sentimental attachment to Adina. So both as a shareholder and from a sentimental point of view, I want to see that project be successful. So I think that's where I'm going to add value and continuity, being on the board of Li-FT. But Li-FT's got a great presence in Canada. They've got the strategic backing. They've got a team over there. So I think it's going to be a great combination.
I think that the Winsome team has done a phenomenal job on advancing this deposit, you know, and we want to keep that knowledge in, and like Chris said, a continuation of keeping that going. So I think it's going to be great working together.
And Francis, what does continuity without duplication mean in practice when integrating the Winsome management into the Li-FT leadership orbit?
Yeah, I mean that's something we'll get into in the next months of see how do we integrate the teams in terms of personnel, and how does it look? I mean, I think Chris and also Simon, like I said, have done a great job, and it's really, when you put people together, you kind of find a balance of how do you work together, right? It's not like on day one you just say you're doing this, I'm doing this. It's let's feel it out and see how it goes.
Right. And in terms of the Avenir and what it brings in terms of deep Quebec operating DNA, how does that change the conversations with regulators and government compared to being standalone explorers?
Well, I mean, I think, like Avenir's been Agnico has been operating mines in Quebec for a long time. So they have a lot of deep relationships there on the regulatory and permitting front. As we know that, permitting it's kind of like marketing a stock in a way, right? Like the more that you can get it on people's radar earlier on before the file even hits their desk, the better chances of you have of hitting the actual permitting timelines that you want to. So there's a lot of relationship building and relationship utilization, I think, on the regulatory side. And that's something where, we think that at least we'll have somebody to connect the dots in case that dots need connecting. That's my take. And I don't know what Chris has to say about that.
I agree. I just think I think the resources we'll be able to call upon are so much deeper and broader and more far-reaching than what we've been able to do so far. I think Avenir is going to bring that depth, that experience, and it's just going to de-risk the process. But really, that's our whole thinking behind this entire scheme of arrangement, is that merging with Li-FT just de-risks the development process for Adina. I think, to put it very simply.
Over the next 4 months, what milestones should shareholders focus on as they assess the scheme? What questions do you expect to be answering as part of the monthly series going forward?
I think from a Winsome perspective, the only confusion we've had so far is that a lot of Australian shareholders don't know Li-FT because they're not listed on the ASX, they're listed on the TSX. So it's explaining who Li-FT are and the strategic benefits that Li-FT brings, their presence in Canada, the strategic partner, the fact they've been able to bring in Galinee, purchase it from both Azimut and SoCrem. I think those finer points are not often. For some shareholders, we need to get that message across. So that's one of my jobs, I think, over the next few months. But it's business as usual to an extent for Winsome. We've still got a few environmental studies going on to continue our road development we're going to do trade-off studies with Li-FT about the economics that Francis talked about before. Is it worth doing, 4 million tonnes per annum? Is it, how do we take on Renard? All of those sort of studies. And then it's working out how do we integrate the adjoining ground, the Gallonee ground, into the broader resource we already have. Do we do drilling now? Do we do drilling later? How much do we need? All of those sort of integration issues are going to be over the next few months. But otherwise, it's sort of business as usual. We're still, as Winsome, we're continuing on developing Adina. But now it's with a sort of big brother by our side.
Could I chime in here? Because you said part of your job is to explain to Winsome shareholders, what is Li-FT, right? Because those shareholders are going to be receiving Li-FT shares, right? And you will have a duly listed company. And, so the RK Equity Scoreboard, we've been watching Li-FT for a long time. You have had a high valuation almost since your IPO. And you explored in Yellowknife, which is not an area I think that a lot of Australian investors know a lot about. They've looked at Ontario and, and Quebec. So could you, Francis, I guess, talk about, talk about that in a second, but on the flip side, a number of Winsome shareholders are saying, Winsome was trading, essentially for, you're getting Adina for free. If you look at the cash and the holding in Power Metals, for some time until the recent rise in the price. So you're paying a 65% premium, I think, to the undisturbed, price. It's a 50-cent price, but for holders like me who remember, Winsome at $2, right? Or when they announced Renard and the stock went up to like $1.50, 50 cents in Li-FT shares, besides the heft of Agnico Eagle and, combining the Gallonee and the, TSX listing, there's value to that for sure. But, what else is there are Winsome shareholders getting, Francis, in Li-FT's assets?
Sure. So Li-FT right now, our focus has been on our Yellowknife lithium project, which is, like you said, in the Northwest Territories, just outside of the city of Yellowknife. And we put out the initial resource estimate of 50 million tons at 1% lithia last year. And so I think the benefits of the Yellowknife project are, big resource and it'll get bigger, but I think the key is the infrastructure. And we're a half hour outside of a town of 20,000 people. It's the capital city. You don't need to have a camp. People would drive in and out of town every day to go to a mine site. We're 5 kilometers from a paved highway, 5 kilometers from a power grid. And then there's also rail access that's about 400 kilometers away. So from an infrastructure perspective, there's not many Canadian projects that can match that in terms of what's there and also the transport to get spodumene concentrate out. And so that's what Winsome shareholders will be walking into, and like Chris and Winsome are planning, it's business as usual for Li-FT as well in the next 4 months. So we expect, we are going to go out and do a drill program starting in February, and we're looking to increase the resource base significantly on that drill program. And that would lead into a PEA that would come out around the end of the year. And so this is really this is the work plan that we had for the last, call it 4 months, and we will continue on that path. And I'd say by the end of 12 months, then it becomes a strategic review. And I think our plan is that Winsome and Adina is the focus for the company going forward. And then we kind of crystallize some value at Yellowknife through a PEA. And the other part is that we're going to initiate a scoping study on Downstream. And so you gave a shout out to Anthony C. Who came in as executive chairman. So Anthony's been in the lithium business for quite a while and was involved in running Galaxy, which did have a lithium refinery at some point. And so we're looking at a downstream option in Alberta. And the reason Alberta is Alberta is a chemical refining hub for oil and gas. And in Fort Saskatchewan, this is just outside Edmonton, Shell has a gas refinery, Gao is a chemicals facility, there's nickel refining, cobalt refining. There's 3 sulfuric acid production facilities on site. It's a rail away. There's direct rail down to Wyoming, where a lot of soda ash comes from. And I think the key as well is it's got some of the cheapest natural gas in North America. And so from all of those perspectives, I think that Fort Saskatchewan is potentially the best place for lithium refining. And also from a permitting perspective, it's already a massive chemicals park. And the Alberta government has said it's about 6 to 12 months to permit a new refinery. And so we'll be initiating that in January. And it's really using Anthony's deep lithium connections that will be having some commercial partnerships with companies that have actually built lithium refineries before. So that's what Winsome shareholders are coming into. And I think the other part, like we've said, Avenir is there as a 10% shareholder, but Li-FT has a very strong share registry and it's very tightly held. It's about, 10 people have about 60% of the company. And, I think that has really been a massive benefit to Li-FT is that, we've got a lot of the registry that nobody's selling. And, it becomes a lot easier to manage than if the registry is a different composition. And so again, that's what.
Who are those other shareholders?
So there is a close partner of mine. He's a fund manager. Him and his family have a close to 20% stake. There's a couple. It's a couple private individuals, high net worth guys that have big stakes in it.
Okay, and Commodity Capital is also a shareholder, I think.
Yeah, that's right.
It's a Swiss shareholder, has been around for a long time. Okay, and Waratah will have what, Chris, of the combined entity? Do you know? Have you done that math?
Well, they own 10% of us at the moment, and they'll get 0.107 is the ratio of shares they will get. So I guess Winsome shareholders will own about 35% of the combined company. So they own 10%. I assume it'll be a third of that, maybe 4%, something like that.
Okay, so 3-4%. Okay.
Yeah.
Okay, but this family office, the combined entity will own, I guess, 15%. That'll be the, it'll still be fairly tight. Because, your stock hasn't had that much liquidity, Francis, whereas Winsome's stock has had quite a bit more liquidity. So this will make for, more liquidity on, I guess on both sides. But again, the Winsome shareholders are not familiar, I guess, with the Yellowknife Alberta, story and they're have to evaluate that, and the value of that alongside all of the other attributes that you're bringing here. Okay. Anything more that you guys want to say, Francis? I guess you've been marketing this a bit in the last few days. Like I said, I've been quite busy, but I saw a couple of pushback, on X from a few players who were looking at things from the Winsome perspective. But as I mentioned, this I think Oz Bandit, EV futurist, was thinking if you really believe in Adina and now Adina Galinay, this won't be an Azure, which kind of like got taken out, very fast in WA. You could advance this to and get full value of bringing this into production.
One of the ways I think of it, Howard, is that when we combine, we'll have a market cap of about 330 million-ish, somewhere around there. When you think about what we've got with Adina and Galinay, there's 100 million tons there for sure. Who knows how much more? We sort of know that from our 80 million tons now at Adina and the drilling that's been done next door at Galinay. There's Li-FT's existing Yellowknife at 50 million tons. We're going to have 150 plus million tons as a company. And as soon as the lithium price gets somewhere decent, call it $1,200, which is going to be at some point, I'm guessing some point in the first half of next year, that's $1 billion company. Easy. You think of the last lithium run, and you'd have $1 billion based on 100 million tons. We're going to have 150 plus. And so I think there's, in my mind, this is what I think of it, we're going to have a $330 million market cap when we combine. There's at least a three-bagger there, in my mind, just from the rising lithium price without us having to do anything more, let alone the studies we're doing, the additional drilling. Perhaps Renard plays a part there somewhere. There's a whole lot more to come. I just think this is a great opportunity. I really believe
I hear you.
I would jump in there too and say, like Azure is an example of that got taken out very quickly, but let's talk about Galaxy Resources, and that whole story of how through a series of mergers it became, plus $5 billion company, and then eventually, through a cycle got taken out for $6.7 billion by Rio Tinto, right? And how did that start? It started with some development projects, and then through a series of mergers it grew. And just one other point, so from Winsome shareholders' perspective, Winsome, is at $1.52. But I think if you look at Li-FT share price, our highest share price was $16.50 a share. And, so it's always things you can look at, the price was this and the price was that, but that was a price at a given point in time, and if you look at it on a comparative basis, like Li-FT share price also looks attractive, right, from the top.
I think I appreciate that. And I like your Galaxy analogy because Mount Catlin was brought into production and Sal de Vida was always, a great option. And now that's being advanced. And James Bay, what is now called Galaxy, was another option. And that's likely to be the source of the Bécancour refinery that Rio Tinto is building. So all three of those assets are in development. One's now mothballed, but the other two are in development. And so it's Adina Galinée seems to be the flagship here, but you have lots of optionality built in with the Yellowknife and some of the other assets, within Winsome. You still have, Canset and Cermak Clapier, and you have your private equity, interests in Power Metallic and Power Metals. So, okay, stocks are vehicles, right? As well as they are specific projects to be developed. And this is you're right, heftier, more institutional grade market cap with greater liquidity to attract both institutions and high net worth onto exchanges. So, but not in WA, right? And not in Africa, and not in Brazil, in Canada. Okay. Thank you very much, guys, for informing us about this. And as we mentioned at the outset, we hope, in the next, month, 2 months, as there's further news flow, we could have you back on in the run up to the vote. Obviously a merger has to be approved, and it's great that Waratah has already said yes, that they'll vote their shares. So any other Winsome shareholders, you'll be evaluating this. If you have any questions, feel free to reach out to us at rockstockchannel@rkequity.com, and we can connect you to Chris. And for any Li-FT shareholders who may not have been watching this channel, and feel free to reach out to us as well. Thanks again, Francis. And hopefully we could have Anthony on sometime in the future as well.
Absolutely. Thanks a lot, guys. Appreciate it.
Absolute pleasure. Thanks, Francis.
And before I sign off, I'd just like to thank again our sponsor, USCF Investment, who've been making it easier to get exposure to commodity investments for almost 20 years. USCF's Sustainable Battery Metal Strategy Fund, ZSB, is designed to capture investment exposure to metals powering electrification, such as lithium, cobalt, copper, nickel, aluminum, and silver. To learn more, watch our inaugural episode with CEO John Love and visit uscfinvestments.com. And thanks as well to Lithium Royalty Corp., which, in addition to everything we've mentioned today in connection with Winsome and Power Metals, published their Q3 results, which demonstrated 86% growth in revenue from last year's third quarter, which included a first royalty payment from their 3Q project operated by Zijin Mining in Argentina. To read that press release, visit their website, lithiumroyaltycorp.com, and follow them on X at lithium_royalty.